FirstRand Bank says its profit of 7% is good enough given the low growth environment. The bank reported headline earnings per share of 424 cents for the year ended June, lower than the 436 cent estimated by economists. Speaking to our senior reporter Liabo Setho, CEO Johan Burger said in the face of a weak economy, the bank is cautious about extending credit to over-indebted households. This as it scales back on expansion elsewhere on the continent, where growth prospects have been dealt a blow by the collapse of commodity prices.
Banks provide finance or provide transactional capability to the client base. So to the extent that business confidence or consumer confidence is lower, there will be less activity, i.e. less demand for credit from the corporate sector or less transactional activity. So to the extent that the customer base, the confidence is lower, there will be lower activity in the banking sector. Obviously, we have to make sure that in a lower confidence environment or in a more negative macroeconomic environment that we assess credit appropriately, i.e. make sure that the affordability, whether the affordability is a consumer or affordability is a corporate, the affordability is still appropriate for the amount of lending we extend to that customer base.
Speaking about lending, what is your strategy with regards to helping small businesses, SMEs? We know how that has been tainted as the backbone of the economy, but we are facing a worsening economic climate. What's your response to SMEs?
Yeah, so the SME market is an important market for South Africa, firstly, and I think it's a very important market for the banking sector. So if you look at our businesses, and that would be predominantly in FNB and in Westbank, a large part of the credit extension in those business units, in fact, happened to the small business unit. In fact, it's a very, very important market for banks and a very important market for South Africa. So strong growth across asset lending and into that customer segment.
That market, the SME market, they talk a lot about how financial institutions are very, very tight when it comes to lending criteria. Do you see yourselves as one of those people, or have you loosened up a bit?
No, I think one needs to understand a lot of times small businesses, you must differentiate between a business that has sustainable cash flows versus businesses that are startup businesses that are more appropriate to be funded by venture capital. Versus businesses, small businesses that have a visibility on cash flows, which are more funded by banks. So it's important that banks use depositors' money to extend credit. So we must make sure that we look at affordability very carefully when it comes to any business segment, large or small, making sure there's visibility on cash flows, affordability, and to extend credit in the market. Startups are very difficult to necessarily fund in a banking sector, but we do extend credit across most of the segments.
Charges are up around 13%. That gives me an indication that you see more people not honoring their agreements with the bank. How are you dealing with that?
I think that you must always, when you see growth in bad debts, don't always see that as a reflection of the quality of the loan book. A lot of the times, if you've had growth in lending, you will also see growth in bad debts. So the bad debt charge very much a reflection of specific growth strategies, but also, yes, a reflection of tougher macroeconomic environment. So the 91 basis point or the 13% increase, interesting, it's in fact lower than where we would expect it to be given where we lend, because we would expect to lose somewhere between 100, 110 basis points, and it's still at 91. So 91 is actually a very good outcome.
Give us an idea of what the appetite is like out there for new passenger vehicles, your Westbank division. Are they extending more credit? Are people buying new cars? Are they buying more second-hand cars? What's happening in that space?
Yeah, it's interesting. You see different things happen in different economic cycles. So for an example now, you would see new vehicle car sales are down in double digits. But a lot of what then happens, you see the consumers buy more second-hand cars. So you suddenly see a shift and a growth in second-hand car finance. And Westbank is very well positioned, and we would have experienced very good growth in the second-hand car market. So when you start seeing the economic cycle pick up again, then you see a shift again from second-hand cars to new vehicles. So yes, the new vehicles have an impact on the profitability of Westbank, but also because there's an increased demand for second-hand cars, we see an uptick in the profitability of the second-hand car finance market.
Johan, you have a different clientele in the R&B segment. How is that particular market holding up?
Yeah, so R&B is large corporate predominantly. And the large corporate segment in South Africa have a very good what I refer to as strong balance sheets, cash flush. So those companies, although there's not a lot of growth, or investment from a banking or credit perspective, those companies are in a very, very strong position. So we're not seeing any negative impact of the macros yet flowing through to the corporate sector. Yes, you see it flow through from a growth in profitability perspective, but not from a quality of credit or bad debt perspective.
You must have been quite worried when the GDP figures for the first quarter indicated negative growth. Just 2 days ago, it looks like we've bounced back. 2.5%. One economist says to us that we may be out of recession, technical recession for now, but we are in investment recession. Do you think that we have what they call now what they've termed as an investment strike by corporates who are sitting in these very large balance sheets, by the way?
No, I think that no management team or no corporate does not want to grow. So the issue is, take any segment, they're looking for demand. They're looking for demand to pick up before they will start investing. So unless the economic signals are starting to indicate stronger growth, people are not necessarily going to invest, because you can't, there's sufficient capacity at the moment. So there won't be any need to invest unless we see the economic trend line picking up and demand coming back.
And your view, your personal view on what everyone is more concerned about in the private sector, about policy certainty. Do you feel that there is an urgent need for that in order for the very same corporates to start making investment decisions?
No, absolutely, there's absolutely no doubt. But for confidence to get back, many things must happen. I think one needs ethical leadership, one needs policy certainty, one needs fiscal discipline, one needs to make sure that the SOEs are properly managed. All those things play a role in rebuilding confidence. Both confidence in the consumer sector and in the business sector. So there are many things that need to fall into place before we're going to see confidence being restored in the market.